Good morning, everybody. Welcome to the Flow Show. Tuesday, 3rd of December. And lots of fun and games going on in France still, which is moving the euro about, or has been moving the euro about a bit. We'll go over that in a moment. Good morning, Mr. Keyman. How's tricks?
Morning, Ryan. Morning, everybody. Yeah, we're doing all right. Doing all right. December has started, and political games are just continuing, right?
Yep, same old, same old. If there's not a political mess going on somewhere, then it's not the usual theme right now. Everywhere you look, there's political stuff going on. Right, let's get stuck into everything. China, their Ministry of Commerce has threatened to adopt necessary measures over US chip curbs, further sanctions and battles going on between the US and China. China then have banned some goods and materials that are usually used for military purposes into the US, rare earth materials, that sort of thing. So that bum fight is continuing. China not exactly looking to go down without a fight in terms of sanctions, tariffs, and whatnot, and that will pick up obviously when Mr. Trump takes over. Coming over to the Riksbank and Bremen, the Riksbank says he envisages policy rate being cut in December and the first half of next year. So that's part for the course there. They're going to continue on their easing path. A bit of data out this morning. There's not an awful lot. We had Swiss CPI coming in a touch softer on the year-on-year measure than expected at 0.7%, but was up a pip on last month. The monthly number coming in at minus 0.1% as expected and previous. The EU harmonised measure was expected to rise to 0.8% as well, but that also came in at 0.7% month on month. A bit worse though, down 0.5%. So lower, much lower than the Swiss CPI measure. We've got the SMB this month as well. Kay, does that change anything for those guys?
No, I don't think so. You know, yeah, the market will be is hoping for a 50, but I'm not sure whether it's really at the order of the day. What are they at? 1.25% now, SMB. Let me just quickly check. If they would cut 50, that brings them right at the overall CPI right now. So yeah, it's all possible, but I don't think it changes anything to their approach right now. FX may be more important than really that minor change that we saw there in the CPI.
Yeah. Could they be one of the banks that goes back to zero or even back into negative rates?
Well, I mean, Schlegel didn't rule it out, did he? It is possible, but the question is also is always is your economy doing bad enough to go into negative rates? I mean, only effects should be a bit a bridge too far, no, to push them into negative rates. Well, CPI can if it continues to come off, but I don't know. Mm, a lot, and really, I think it's tough to now judge or judge down to where non-US central banks will go or have to go because, as you already mentioned as well, I mean, there's a lot of threats and a lot of promises, but what is really going to be put in place once Trump gets the seat? And that is probably going to be then the time to judge how the economy stands then versus what Trump is going to do, and if they then need to go perhaps into negatives. But I think it's a bit an early call for them to really have to go down there.
Yeah, and we also got to remember we shouldn't look at the Swiss in the same lens we look at other central banks. Inflation never got up to the heights we saw elsewhere. Rates never got up to the heights everyone else took them to. So it's a different. They're playing on a different
Yeah,
lower level than everyone else. So anyone who keeps thinking rates might collapse in Switzerland might be a bit disappointed if people think they're going to go the same as Riksbank or RBNZ or whatever.
yeah,
So
and actually SMB is already at 1%. So if they would cut 0.5%, they would be under the CPI, right?
yeah,
Do they really want to do that? That's already negative real rates if they do so. Do they really want to do that at this stage?
yeah,
That is my question now.
yep. And a good question it is, mate. Right, let's get stuck into the mess that is France. This all developed through yesterday and has developed further overnight and into this morning. So Le Pen said she would vote to oust Barnier if their demands on pensions were not met yesterday. Barnier basically stuck two fingers up, the old Spanish archer, and said that he's going to force through the budget using his constitutional power that he has to force through the budget, which he did, and that got everyone up in arms. So Le Pen said about that their demands on the budget were not met, and no matter who tables the no confidence vote, we will vote for them all. And that's set to happen potentially tomorrow. I don't know if there can be any last minute deal making done, but otherwise tomorrow France goes to a confidence vote with the very likely outcome that Barnier gets ousted from that, and then we enter another mess in terms of getting a new PM in place over there in France. The Euro seems to be already a bit bored of it, Kay, right now. Is that to be expected?
Um, I I think it's more to do with the dollar if you look around the board a bit. But yeah, the market knows now what to expect. But it's I'm sell the rumor by the fact, we can call it that way. It's a bit strange because it's now 2 days in a row that the euro has been rather bought in the European morning. Um, so I don't know this French this French thing, how hard will it continue to weigh? I would say it will, but yeah, it's going to be an ongoing mess in France, right? I mean, who are they going to put there? I mean, assuming that Barnier is out to come tomorrow night, who are they going to put there? I mean, none of the let's say three poles are having the same program or wanting to work with each other. It's going to be continued drag, I would say, on the euro. So I'm a little surprised in some way that euro 2 European mornings in a row is doing better than what we may expect.
Yeah, yeah. Mike asks, is the French government failing baked in for the euro?
That's what
It's
we
been
just
baked
discussed.
in since July when Macron, remember, did that snap general election that bit him on the arse, and he lost out on that one. So they've been in a mess all this time, which was a bit. It surprised me yesterday why we did get this reaction down in the euro over all this budget stuff. But when you're talking money, budgets, that is potentially something the market pays attention to. But yeah, this has been ongoing, Mike, and it's going to continue to drag on just like it is in Germany as well. So, yeah, I don't know what the outcome is either, Kay, who they put in place. No one's got a mandate to do anything over there. We could, we heading for elections next July again?
Yeah.
What's
Um,
the, what's the, okay,
I
I'm not
mean,
even keeping up yet.
in yeah, in the French law, you can't call elections within 12 months of the prior one. So then the next one is July. I'm looking at how things go, and there's a bit of a risk or chance, or depending which side you're on, that Le Pen gets it overall if they would do elections right now. But in the meantime, I I really don't know, mate. I mean, it's to me, it looks like one big mess over there. And we know how the French tend to react to messy situations. I am not excluding any trouble on the streets either. Before this whole thing is over.
Yeah, no, I agree with that. So, in answer to your question, Mike, maybe some of it's baked in. There might be some that's not. It depends how the situation unravels. Just go with the flow and see what happens, mate. You're in the same boat as all of us. Right, over at the ECB bods, Ollie Wren says there is reason to continue rate cuts this month. ECB's Kazakhs was up again just before the show started. He was out last week and yesterday. A little bit less, I won't say confrontational, but he's toned his comments down a little bit, saying that the ECB is data dependent and a gradual ECB approach is still appropriate. The pace and depth of ECB easing will be determined by the data and their judgment. Looking back at a bit of data we got yesterday out of the US and Canada, PMI data. Canada saw an improvement to 52 from 51.1, so higher than expected. Was expected to pull back. It went up instead, which seemed to be making a bit of a mockery about these expectations lately. Over in the US, half decent numbers there. From the S&P number 49.7, that's the final, so an improvement over the flash 48.5, 48.8. Then we got the ISM, which again, another improvement, was expected to rise to 47.7, came in at 48.4. Prices paid, though, pulled back somewhat to 50.3, so a little bit of disinflation in those numbers there. Employment improved but stayed negative, rose to 48.1. New orders moved into expansion. So overall, a decent-ish numbers from the manufacturing sector. In the comments, they were a little bit mixed on that one. People still seeing a bit of slowness, going through stocks and inventories. But there was one firm that said that things had looked to improve since the election, and there was a more positive theme being felt. So that was the Trump effect going through on that one. Overall, soft landing data for the US. Anything you pulled out from that data, mate?
No, I think you said it all. That's about how it unfolded and what we have now. The more important one is coming tomorrow, the services.
Yeah, services tomorrow. We did get some Fed heads out. Bostic saying that keeping his policy options open ahead of the December meeting. Fed's Waller says he was leaning towards a rate cut in December, or is leaning towards a rate cut in December, absent any data surprises. But then he said he could argue a case for skipping a December cut, and he'll be watching the data closely before deciding. He would support holding rates steady in December if the data shows forecasts of slowing inflation are wrong. Direction of policy rate over the medium term is clearly down. Recent data raised concerns that inflation progress was stalling meaningfully above 2%. And then this was quite a good comment. He said, average inflation targeting framework was very backward looking and blew up very quickly. Those who've been doing this game for a few years will remember that the Fed brought out AIT, average inflation targeting, to try and measure inflation. And that lasted about 3 months. And no one's mentioned it since, except in the odd passing, except for Waller. So that was one of their failed policies. Fed Williams says that he expects more rate cuts to happen over time. What Fed does with policy depends on incoming data. It's unclear where the neutral rate is right now. Kay, just going back to Waller's comments, that would suggest we're just going to be waiting for the next inflation report and to see what happens.
Mm-hmm. Yeah, keeping the door open now. That is perhaps one of the messages that we need to take from it. Yeah, I think it's going to be important what's happened or who speaks next because this today actually we have Adriana Kugler speaking on the labor market and monetary policy, and then tomorrow we have actually Powell participating in a discussion at the New York Times Deal Book Summit. I don't know whether he's going to tell us a lot, but I think we are going to know a bit more how they feel going into the labor report, CPI, and then into the meeting. We may already get a couple of hints in addition to what Wallace said. We also have Goolsby today, but he's a weather vane. Well, I'm not really listening to Goolsby myself.
No, definitely not. I'll be watching the football when he's speaking, so
Hmm.
no, I definitely won't be plugged into him. But yeah, as far as Wallace concerned, it seems he's waiting on the next inflation report. And irrespective of the data this week, obviously jobs data is going to be very important. But then I think we're going to see a can kick as everyone looks at the next CPI data, which I think drops. Is it the day? I'm not sure if it's next week or the day of the Fed meeting. I have to check it up. But it's we did get a CPI before the next FOMC, most definitely. So we'll have to check on that one. Right, Mr. Trump. He's
Next
stepped.
week, yeah, next week,
It's next week, 12, 13, something like that, whenever it is. So
11.
anyway, we'll know in advance. We'll know in advance. Yeah, Mr. Trump, he's stepping into the Israeli Hezbollah Gaza conflict, saying that there will be hell to pay if Israeli hostages are not released by January, otherwise when he takes over. This ceasefire, non-ceasefire thing is still going on. They're still lobbing bits and pieces at each other over there. The US is claiming that the ceasefire is a success, and then 2 minutes later, Israel says it's attacking targets in Lebanon because the ceasefire has been broken by Hezbollah. So it's that mess is continuing over there. That's it, I think, on the old comment front and headline front. Unless you've got anything else, Kay?
No, yeah, you covered it all, mate.
Good, 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 good. We can move on from that. Right, let's start with the good old euro. This one's back above 105. It's really getting a bit messy down here now. It doesn't really know what it wants to do. So you've got to give that sort of the respect it warrants at the moment. We've had this trend move down. It's not yet looking like it's ready to stop doing that, but we're just having a bit of sideways action here. This 105 really is your main pivot level here. We need to see something decisive happening, either holding above it or holding below it. We had a little go yesterday, tried to hold below all that French news. I did actually try a little add to my shorts on this break under, but it obviously hasn't lasted. I got out of that, pretty much managed to scratch it yesterday after it came back up again. But here we are messing around. We're messing around the top of the zone, can't get through. And that, as I said before, it's not so much a level you trade, but it's when you get price action like this, okay, you're back into 105. What are you going to do next? Well, if you run into trouble at one of these little small levels, it just shows you that the market isn't really ready to push the direction. Okay, it's not ready to zoom up to 108. It's not ready to zoom back down to 103. So really, all you can do is either try and trade the range, or position yourself for a move either way, or just wait for confirmation and a bit more conviction of what's going on with the price action. I'm still short from up above, up near 106. I'm happy to keep that for now. I may start to think about bringing my stops down a little bit. But yeah, from looking at this one, Kay, it's just still a bit of a coin toss down here.
Yeah, I'm actually, how should I say? I'm not changing my view on the euro as such, but and we will see what happens in the US because yesterday as well we had these two parts trading day where the euro ticked up higher and then in the US sold it back down. So we could have exactly the same thing happening. But I think we should now move over to trading more in the short term at least, more the technical side than really political side, because we know what's going to happen. The market is has probably already priced a fair bit of this French mess short term into the price action. So I'm actually flat on the euro dollar right now, and I'm just waiting to see what to do with it. I mean, the the overall picture hasn't changed. For to me, 106 figure 10, and for as long as we're below, that looks to me like the euro is still is still offered. If we start to move above, then the picture will really change for me at least. And in the meantime, we're probably going to trade I don't know, 4.5, 5.5 or so. And then with the outside boundaries a bit lower around 104 and then 106.
Yeah, no, I agree with that. This is one of those times when you got a bit of a clash between the short term picture and the longer term picture. Based on the fundamentals that are going on longer term, you wouldn't be a buyer of the euro, but shorter term, intraday, you're looking at this. If it can't go down, then you've got to expect that it might be going up and may
Yeah,
even have a
and
little test through 106.
positioning,
Yeah.
positioning. I think a lot of people have probably are probably already short euro, rightfully so. Still, in my opinion, if you look at the European situation versus the US versus even other countries, I mean, there's no reason to be long euros at all. But you can't fight the flows. If the market is already short and you don't find any more sellers right now, we could have a retest of the 106. Why not? Without even changing the picture at all in the medium term.
No, absolutely. And as I said, in my position, I'm happy to build up my short position if we do see a bit of a rally. But I also got to recognise that I'm short down on the bottom, quite close to the bottom. So I have to factor that in to your trading as well. So going to have a look at euro sterling. Ali's looking at that one. I did take a bit of a short last night on this one, purely just because we're holding below. Were holding below this 83 level. We were banging ahead on it. So I'm short at 97. Only got a tight stop up at 15. Please don't go and blast my stop, lads and lasses. Don't take me out. Now you know where my stop is. But yeah, this is still looking weak. But we can't. This is really the key level, and I've pointed out before. It's going on to the longer term chart. It's one of these big long time levels that we just haven't got below it. Okay, 82.76. It's a bit of sort of safety net. We've had times when we've got below it. We've had times when we've held it. The last time we were properly below it, we were breaking up above it, was way back in 2016. So it's a level that it needs to get under and hold under. If it does that, then it will potentially break this whole range. Okay, so this is a 8-year-old range. If we get a decent hold above that, then there's probably going to be further downside. At least we'll probably get to the 82 level, which is another big level on its own. But it would potentially mean this is breaking. That's not why I'm shorting this. I'm just shorting this more of a bit of a short-term trade and see where it goes if it goes. But if we're back above 83 again, then we're probably going back in the box, and we're going to see more of this sideways crap going on. The levels coming in again, 83, 35, 40, 65, 70 up in all this stuff. So this is again a bit of your pivot area. We've had a go. We've been below before. We've held below before, but again, we couldn't properly get through that 82.76. So that is really the key level from this point. So, Ali, if you're looking to short this one, well, you might want to join me here, but I wouldn't go. I wouldn't be betting the farm on this one at the moment. It needs to hold here first off, and as I say, get below there, or else we're going back in the box. And if you do, then maybe you want to wait to see if we get a move up to some higher levels. My Aussie Kiwi short. This one is doing okay-ish. We've got a little bit of a short-term downtrend forming since last week, so we're getting some lower highs and lower lows. So that's continuing that move we got off of this high area here. We are trying to hold below this line here, 10, 110, 15, 18, 20, whatever you want to call it, which would keep this pattern going if we do hold here. And then I'd be looking to make another low. If we don't, if we pull up short around 109.90, maybe just ahead of that 109.80 area, then that would potentially signal that we've got a bit of a bottom in play. And then, as I've been saying the last few days, I wouldn't be surprised if we did see another push up and start going through some of these lows. But for now, this is still going the right way. Technically, it's still looking okay. Happy to stay short in this one and do some slicing and dicing in some of the moves. Dollar China, that had a push up last night. We got this break above 728, which has been a bit of a level for me just to keep an eye on. And we held it. We've got support coming in pretty much all day yesterday. We held it as support. So that was a fairly bullish signal. We had a little tap overnight amid all the headlines and whatnot going on over there, up to 731 area, a little poke through, but it's back below. I'm getting less and less conviction for maybe trying to short up here because this is still going amid the headlines and everything else going on. So again, I'm just sitting on my hands. But FOMO might take over at some point, and I might need to do a little bit. But I might wait just to see if we get a bit closer to these highs. Then at least I can have a smaller trade, lower risk, rather than starting here or starting down there and trading all the way up. So still a little bit interested in shorts, but I'm losing the conviction a bit on this one. Kay, do you think we can get a bit of a blow through on this?
I'm afraid we do ahead of Trump, and then get a reversal once he's in the seat. That's the feeling it gives me right now. Market maybe trying to take it for another run higher. I do suspect that if it goes on its own, the PBOC may be sending out their submarines and try to cap it again around 735. But I'm kind of afraid we go before he takes the seat. A bit of a massive, well, massive. It's not massive. I mean, percentage-wise, it is not. It hasn't really moved that much. But yeah, I think there may be a bit of an extra move there before Trump takes the seat, and then a reversal perhaps.
Yeah, quite possible. I'm going to just have a quick. I know Kay likes to look at it as well, but I'm going to have a quick look at gold because it is playing a bit nicely with the levels. As I've suspected probably since last week, I think we're just going to be messing around in this range between these highs and lows for a bit. Because again, we're just finding a bit of balance, not really moving one way or another. We're stuck between this 2620s area. Couldn't quite get up to this 70s. We are sitting in the middle though. So from a longer term, from short term perspective, we're just going sideways. And unless we break either side of these two edges, then I can't see anything coming. And in the middle, we've got this potentially tighter range, 20s all the way up to 85s to look at for that one. So a bit of sideways action. It's in this one is not moving on any sort of headlines at the moment. What do you think's going on, Kay? Are we just taking a little pause, or
Yeah, I think
is
so.
the market all puffed out with all the geopolitical risks and whatnot?
Yeah, I think so. I think we're pausing around here, and actually this morning I just, but very shyly, and I don't want to push anything right now. Started to reload some really small long, just because that 2620 we've tried 3-4 times and it's holding. I'm ready to add a bit more if we get a test lower for as long as 25.90, 26 hold, but we are stabilizing at relatively high levels in my opinion. So I think if I would bet on the next big move, it's higher again. But let's see first what's happening, because the geopolitical risk is going to be a driver. I think the market knows that the ceasefire in the Middle East is fragile. They've already been talking about the one or the other side starting to violate the ceasefire. And then I think the story Ukraine, Russia is still there as well. And well, I don't really know about the dollar. As I said, I have a bit of trouble to unsee the past year's end of the year in the dollar, and we're seeing um, equity markets at such a lofty levels. Okay, the rates have stabilized, so that's not the point right now. But it's just the fact that we are holding. I thought gold on the ceasefire and all, and the dollar being bid. I thought gold could have gone easily under 2600, but we are not even going there to test it really. So looks to me like there are still some deep buyers around in that little shiny stuff.
Yeah. And US tens, I've been saying this needs to be in focus. We're back above this 721. So we've had a couple of goes at getting
Or
under this 720s,
or
720s, 420s. I wish they were 720s. We'd all be piling in. 420s. So this really is, a bit of a make or break level. And the euro euro dollar isn't really moving the same way because when we were breaking down, I would have expected the euro to be rallying on the back of that, but it didn't really. And then this morning we've got this move back up again. You'd expect, we're seeing dollar yen looking a bit stronger ish compared to what it was doing when yields were down here. But again, euro dollars. It seems like euro dollars out on its own a little bit at the moment, whereas the rest might be following yields. Kay.
yeah, the trouble is, if you look at the yield differentials over the past couple of days, I'm always watching that, and if you take the European rates, they actually they narrowed the gap a bit with the US rates, and it seems like algos are plugged into it again. But the reason why is perhaps not the right one, and the reason why is that because French yields are pushing higher, and those are obviously part of the European yields. But I think if the algos are buying euros because the yield differential is narrowing, I think that it may be the wrong the wrong reason, But yeah, they're firmly plugged into the differentials again. But I think, as I said on the US yields, I think 420 for me is a bit of the equilibrium level now. We saw that we went quite a bit below, quite a bit above, and then now we're stabilizing around there. I think, and look back where we were like July, August, we were around there too. So I think it's a bit of a look what we have done in the past. It looks like the level where the market reflects on what to do next.
Yeah, absolutely, absolutely. So, I'm not one to take on yields, but yields do have a say in things which are obviously determined by
Absolutely.
price. So it is an important. These are important levels. This is where the price reacts more so than the yields react. So yeah, but just from a yield basis, that's what you want to be looking at, right, mate? Let me kick it over to you for a
Mm-hmm.
few. All yours.
Okie dokie. Right. Can you see my chart? First of all, for Mike, the Kiwi. If you look at it in this is a daily, right? If you look at it globally, we are not. It's not still not looking very very healthy. But then, if you zoom in just a little bit, not too much, we can see that we've done this October low, then we've done this end of November low, a few lows in between here as well. Yesterday we tried and we went down to 58.60 around, but we are not tackling those lows now anymore. And it could just be that we are starting to form a little bit of a base. As I said, I have trouble to unsee what happened last year in with the dollar at the end of the year. We may be in a wait and see situation right now. But if you look at it purely from a price point of view, I think we are going to need a close above 59, figure five, Mike, to start going. And ideally, if we look at it for an end of year rally, perhaps, because that is kind of the way I'm looking at things right now. But of course, still very much cautious because of central banks to come and etc. And the jobs report in the States. I mean, if that's a good jobs report, we may as well be trading below 58 here. But if we start to get above 59, figure five, close above that, because we have tried many times. But even if we got like a little bit of a close, the next day we were back below straight away. So for it to start creeping higher, I think we are going to need to break above 25.35 on the Kiwi, and then we can move higher. For as long as that does not happen, the risk is there that we are going to retest those lows, 58, 58 and a half, even 58 the figure. Why not? Because the longer term picture is still not looking great. Aussie has again shown up at 64.40 yesterday when the dollar got bought when the States came in. Pretty this is starting to look like a pretty decent level, and I'm wondering if I missed it or if the next move is going to be crash down below. But this looks to me like a solid round of buyers coming in every time we go down there. Are people covering shorts? Possible, but we really need to respect that 64.40. Around 65 here, we've traded it so often. I don't know if we still need to pay too much of an attention to it, but we are about in a similar situation as the Kiwi price level. Well, the small pips levels, 25.35 on the Aussie. If we start to get above 25.35, I think there's going to be a bit of more relief. And then if we get a confirmation, and that is a level that I've been watching for a while now, keeping an eye on for a while now. If we start to get confirmation above 65.50, 60 on the Aussie, then we could see that year-end rally starting to kick in, okay? But for the time being, on the tip of the toes, but 64.40 is one big level. I know that people are waiting to get into the 63s to buy it. I'm not even sure we're going to get it. I'm not even sure when I look at this kind of picture if we're going to get it. Going over to the dollar Swiss, Ali, I've been scaling back, mate. I was really hoping that we would already be trading 89, but I've scaled back more this morning, so I'm only smalls in left. Obviously, here it's the 88 level, 88 figure, 88.20 that we still need to watch. Um, as you were saying at the start of the chat, it's you're safe in positions. I am very safe in my positions as well. I've been legging out of some stuff and run a couple, but I'm not going to be a hero if this starts to break below 88. Okay, I mean this is really my level where I at least am not going to keep long dollars in the dollar Swiss because we are not safe of a move here. S&B is coming up as well next week on the 12th, I think, and we will see. I mean, S&B would ideally take it through, and then if we are patient, because it's also a pretty decent long for the carry. I mean, it's not something where we pay money. We get a little bit of money to be long of it overnight. So I'm happy for as long as 88 holds to let a piece run. Okay. Um, a bit of a head and shoulder there. In the dollar Swiss, you mean, Rob? Tag, this one? Yeah. Yeah, I know. It is a bit in danger, and even when forming the head and shoulder already before the 88 was a big one, yeah. So if people pay attention to the head and shoulder, and if it would start to break below, it's really going to be impulsive, and don't fight it if that happens. That's what I would say. Yeah, then okay, yeah, you spoke about gold. I just want to tell you that I've taken the box away. It's still hovering around, but we are going far too easily above and below. So I've taken this 35, 45 bucks I've taken it out. And I'm rather looking at on the short term 26.20, 26 and a half. It's a bit of a moving averages there, 38.2 coming in there. That is a bit of a level on gold, and I just shyly bought a little bit back, because already overnight we can see that these 30s are holding okay. Silver is now where it was underperforming gold for a week and a half, 2 weeks. It's now starting to outperform, and we are trying to get through that 30.90. If it goes above and keeps above during the US session or on the close, I think there's a fair assumption that this could go into the mid 31s, 31.75. But here the box is still very, very valid, okay, because we held really twice the bottom of the box. We tagged it a number of times, also on the top side, so it's still a very valid box, anywhere between 29.65 and 30.15, and also the trendline support is coming in gradually towards the low side of the box as well. So this is really going to be or remain, I would say, a pretty interesting zone, this one in silver. What else, guys? Do you have anything else that we should keep an eye on? I can always have a look, but again, we confirmed yesterday, came very close to 162.5 on the Euro Aussie, capped again. But then, as we saw yesterday, and we're doing it again, European morning, those Euro crosses, they have a tendency of pushing back a bit higher. Twice we come in at the lows coming out of the Asian session, and twice we are pushing up a little bit in the European session. So not so sure what's happening there, but at least 162.5 is already a pretty decent level, or should I say, is still a pretty decent level on the Euro Aussie to keep monitoring. And the Euro Kiwi, sorry, we haven't really gone up there yet to that 179.30, which I'm keeping a very, very close eye on. Has been seen a couple of pretty decent rejections. Yesterday we rejected in the 178, 70, 80. Could be doing it again today. I don't know, but I'm really focusing on the upper end here. This is one of the plays where I still think that when I look at non-geopolitical risk in the markets, they should, in my opinion, find resistance on rallies and perhaps move gradually lower into year end. It's still in my head, those ones for those crosses. And if there's nothing else, I'm giving it back to you for today, Ryan.
Thank you very much, mate. Yeah, that'll be it. That's all. We'll be done and dusted. Have a great day, everybody. Good day's trading, and we'll see you all bright and breezy tomorrow morning.